Good day, everyone. Hope you're having a fantastic day. In this video, you're going to watch me find, execute, and manage a trade on NAS 100 using ICT concepts. It was a roller coaster. A lot of things happened, but you learn a lot from my thought process and, how I think while the trade is evolving. Be sure to watch through to the end because at the end, I share the analysis of how I identified the trade in the first place. And if you're excited about my journey, like I am, to see me go from being a brokey to affording a better microphone for my YouTube channel, please like and subscribe and enjoy the video. Alright, so I'm back with the recording, and before I share the logic as to why I entered this trade in the first place, I want to show how things have evolved. So this is where I took the loss. I didn't want to see price come below this order block and close below this fair value gap here. So when it closed below the fair value gap, I got out. So I took a pretty small loss. My initial stop loss was below this low, so I was able to crank it all the way up here and take a small loss. And after that, you can see price came lower to go higher and eventually took out the objective I was looking for. Now I'll come back again to share the logic behind all of this, because there is a logic behind why this happened. But first I'll clean up the charts and show on the 15-minute time frame why I got involved in this trade, my thought process, exactly how everything evolved, and we can take it from there. Alright, so I think I came in somewhere here. Yeah, somewhere there. The thing that caught my attention was this fair value gap here. That's a 15-minute fair value gap, right? Now, notice how price took out this low with this move. If price closes outside this fair value gap, that can act as support. And then we have this. Price doesn't close out of the fair value gap, but if I'm bearish, I don't expect to see price come all the way up here. There's a fair value gap, there's an order block. I'm expecting to see price be confined in there. So now I'm pretty positive that price is going higher, right? But I want to see a PDRA form so I can find my entry. Now I wanted to see this candle close above here, and this is why I'm saying I have to backtest to see if this idea I have of the breaker is accurate or not. Because if price closed above that, then, well, I'd be 100% confident that this is a breaker block, right? But we didn't have that. In hindsight, I can see those multiple things that could have oriented me, well, into making an entry somewhere here, right? But regardless, this is what we had afterwards. This big bullish candle hit the first objective, which is the rejection block. The closing price of this bullish candle, that's a rejection block. Now, this gave me confidence, but I knew that since we've taken out the first objective, I should anticipate some kind of accumulation, a manipulation, before price goes higher. I'll explain. After price took that out, I was waiting for two things. I've deleted the breaker because that's not what I used to make the entry. First, I'll go to the 15-minute time frame again and show this. So this candle forming means this is another fair value gap. And now that's where I'm looking to find my setup, right? But before making that entry, I want to see some sort of, manipulation, because that's what they do after taking objectives. And as you can see, price leaves these relatively equal lows. So I was actually looking down here and saying to myself, if price comes here and does a liquidity grab and takes out these lows and creates my model, I'm getting involved. And it does that right here. Market structure shift to displacement, leaves a fair value gap, and that's the model from the 2022 mentorship. So it gets in there and takes out the second objective. Now remember what I said here. After taking the second objective, I was hoping, right, the price would just respect the PDRAs and eventually hit the third objective. The reason is it was 4:11. It's just 1 hour before 5 a.m. New York time, and I just wanted to see that get taken out, and then the consolidation at 5 a.m. happens. But this is what they did. So this is the whole thing that happened in the recording, right? They did another engineering liquidity here, holding price in this fair value gap, and eventually took out these lows as well. Now look at what happened when they took out those lows. Went upwards without stopping to take out the third objective, just like they did here to take the second objective, right? So just like they did here, took liquidity, second objective, took liquidity, third objective. So why didn't I get involved in this trade? Well, it's because at this point in time that I am with my understanding of price action, there's so many events that happen that I'm still warming up to. You see, I'm starting to understand the ebbs and flow of the market. So I like to play things safe and not rush into trades, because there's always psychology to worry about. And for me, psychology is like the biggest part of trading, right? I don't want this to be a revenge trade kind of scenario trying to get back my money, because after all, I was able to move my stop from here to up here because they created this order block. So taking a small loss means it's, it's good enough to just take that and move on. Plus, it was 4:43 when this move started happening, and that's very close to 5 a.m. New York time, so I don't like to be in the market at that time, right? So basically that's what happened. Now let's go back down and see why I said I missed out on this trade. So after price waked up here and did a market structure shift with displacement, um, left a fair value gap here and closed outside the fair value gap, that could have been enough to get me involved in a trade. So there's three things happening here. A big market structure shift after a stop run, didn't close above it, doesn't have to, left the fair value gap, and the third candle actually closed above the fair value gap. Now if you go on the 1 minute time frame, you see why I believe this was the reason why I missed it. I mean, it's fair that I missed it because most of these ideas I'm still warming up to. That's why I believe doing a lot of back testing helps clear some of these stuff up. So see how price behaves when it comes back with the next candle to hit this failed fair value gap, because it's supposed to act as support. Hits it just a little bit and then does a rally. So this, taking out this high, that's a market structure shift. That rally left this fair value gap and even a liquidity void. You can see there's no price action in that small gap there, but price just came here and then rallied to take out the first objective. Bam. So it's after the first objective, the whole second manipulation to take out the second objective happened, and that's the trade I got involved in. There's logic in price action that if you can find and identify, it doesn't only help you get into trades, but it helps you identify why your ideas were wrong. And for me, that's massive. If you can learn from those mistakes, put it in your journal, that's how you grow. And at this stage in my journey, that's all I care about. Slow growth. I don't have enough money to invest in, grow faster. I'm literally doing the FTMO challenge. And by the way, I thought today was NFP, so I was thinking to start the challenge next week, but then I realized NFP is actually next week, so I think I'll release another video in the course of the week, like a back testing kind of video to show how I prepare for the FTMO challenge, technically and also mentally, because I've learned a lot, man. Like, I've put in the work, but still, you know how these things work. It's scary, and a lot of psychological preparation is important. So if you made it to the end of the video, thank you so much. Be sure to like and subscribe. Catch you in the next one.